Realistically, without a solution, it's difficult to invest in the United States and carry out the various joint projects currently planned between South Korea and the US. We absolutely must find a solution. Several projects are underway between South Korea and the US. Without resolving the visa issue, meaningful progress remains virtually impossible.
South Korean Prime Minister Min-seok telling us exclusively that investment projects in the U.S. will remain in limbo until visa issues are resolved. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. From ICE rates on factories to a $100,000 fee for H-1B visas, the Trump administration's crackdown on foreign talent is putting billions of dollars in investments at risk. We'll discuss the implications of the visa chaos with top immigration lawyer Charles Kuck, who represented some of the Korean workers detained at the Hyundai factory. While the AI rally in the U.S. takes a breather, the run-up continues in China tech with Alibaba's AI ambitions making it the top pick in the sector. BNP Paribas Wealth Management's Asia Head of Investment Services will be joining us with her take on the AI euphoria playing out in Chinese equities. Here's a quick check on the markets. Asian stocks swinging between minor gains and losses following a decline on Wall Street overnight. Some say that suggests signs of fatigue creeping into the AI-fueled equity rally that's taken the S&P, by the way, to 12% higher this year. Dollar holding gains. Oil steady following its biggest jump since July. Investors pretty much focusing as well on the sale of 40-year JGBs happening later this hour. Again, the MSCI Asia Pac Index currently up 0.1%. Meantime, South Korea's prime minister says billions of dollars worth of investment projects in the U.S. will remain in limbo until visa issues are resolved. The two countries are working to revise the visa system after hundreds of South Koreans were detained earlier this month in a raid in Georgia. Min-seok told us exclusively that the incident's also casting a cloud over talks to finalize a trade deal.
This negotiation wasn't initiated by us. We didn't start from a position of advantage, nor did we raise the issues. Isn't that the case for the entire world? Since the whole world is negotiating under the new conditions presented by the United States, rather than insisting on specific conditions, the correct answer would be that certain things are simply difficult to achieve. Therefore, anything that exceeds the limits of what the Republic of Korea can bear in terms of national interests, acceptability, capacity, or public understanding will be quite difficult to undertake.
Are the issues that need to be resolved around the $350 billion investment fund into the U.S.?
That's generally the case, since the framework for the large amount is already set. The fact that the amount is fixed means it started with the expectation that depending on how that amount is structured, it could potentially be mutually beneficial. However, the structure itself, how the funds are raised or how the profits are distributed, these things need to be within the bounds of what's considered normal. And when explaining to our Korean citizens, it needs to be at a level where they can understand and accept it. Above all, it must be within the capacity of our Korean economy to handle.
When it comes to the tariff themselves, we still have to see the U.S. actually lowering car tariffs on South Korea to the agreed 15%. And even if the tariffs were lowered, the tariff advantage that South Korean car makers had over Japan, for example, 2.5% before the Trump trade deal, that's going to disappear. How painful is that for South Korean firms right now?
First, the FTA structure between us and the U.S. is changing, and that will create a burden. Naturally, if tariffs drop from 25 to 15%, that will be better, but it's still harder than before, and especially at this point. there's the difficulty of having to bear the 25% until this negotiation concludes. So, in short, there are difficulties. Hyundai Motor and others are facing particular challenges. However, as far as we understand, Hyundai Motor currently plans to navigate this situation without changing its pricing policy for now. I personally view this as a relatively wise approach. The government is reviewing various policy options to see what can be done to alleviate the burden on the automotive sector caused by the ongoing negotiations.
More problematic also for Korean companies has been the visa issue, especially with the plant in Georgia. What sort of resolution can we expect on that front?
Before discussing what kind of solution there is, realistically, without a solution, it's difficult to invest in the United States and carry out the various joint projects currently planned between South Korea and the U.S. We absolutely must find a solution. Several projects are underway between South Korea and the U.S. Without resolving the visa issue, meaningful progress remains virtually impossible. The detention incident dealt a severe blow not only to the general Korean public, but especially to the workers who were actually detained. In the absence of firm assurances regarding their safety, both they and their families are understandably reluctant to enter the U.S. again while this matter remains unresolved.
Are investment projects right now halted until some resolution is acquired on the visa issue?
Although the projects have not been entirely halted or formally placed on hold, it will be very difficult for a large number of workers to enter or re-enter the U.S. until this problem is resolved.
That was South Korean Prime Minister Min-seok speaking exclusively with Bloomberg, the Asia trade anchor Sherry-on in Seoul. Now, with visa issues threatening to hold up billions of dollars in U.S. investments, let's get perspective from Atlanta immigration attorney Charles Kuck, founding partner at Cook Baxter. He represented several South Korean workers detained earlier this month at a Hyundai factory in Georgia that Sherry was talking about. Charles, good to have you with us. First of all, what's the status of the Korean workers you represent?
All of them are back in Korea, and none of them want to return to the United States, and that should be a surprise to no one. I think the Prime Minister clearly indicated why. The issue of their security, the issue of their ability to work in the United States, to do the job that the U.S. needs them to do, is currently in jeopardy.
To be clear, it was illegal because the B1 visa, the ESTA visa, allows the Korean workers to stay and do work for a period for about 90 days, I believe. Take us through whether or not it's also common practice for the American companies to do the same, send their workers overseas for such projects.
I'm glad you made that point. A lot of Americans don't understand that Americans do the exact same things when they go to other countries. Each of these workers was obeying the law. They were doing exactly what our law allows them to do. And the problem in this particular situation is that the law enforcement agency at this site, ICE, are not trained on visas. They simply saw people with B1 visas to their mind, which is a visitor working in a plant. And they just arrested them. It was truly one of the dumbest things that ICE has done in our country in decades.
What's the recourse for the workers? I mean, even when ICE knew that what it was doing was wrong, it wanted to continue to put these workers in chains.
What ICE did here, they treated them like they treat everybody, which is horribly. The chains, the handcuffs, the ankles, all of that was horrible. The detention facility was terrible. The food they were given was awful. But it's exactly how they treat everyone. I think people's eyes were open to the fact that we are not the country people thought we were when we do this to people that we've invited in to help us grow our economy. And so at the end of the day, I can see the reluctance. I understand people do not want to return. And the reality is we do not have a fix to our visa system. That can only be done by Congress, and Congress isn't even in session right now.
Charles, some people are suggesting that the problem occurred because the White House has imposed a daily quota of 3,000 workers, immigrant workers, to be arrested each day. Is that part of the problem? And how do you read that?
Oh, that was absolutely one of the issues here. ICE showed up. ICE went to this facility thinking they were going to arrest approximately 200 Latino workers. That was the entire investigation, was about Latino workers working on the site in concrete, putting up metal structures. When they walked in to serve the warrant, they had a warrant to seize some certain computers, and all of a sudden they saw all these Koreans, to them Asians, working. A light turned on, clearly, and they thought, oh my gosh, we can get almost 15-20% of our work people in one day on the quota. We're going to be heroes. Telling about this, what's really remarkable is the very first day they had a press conference, they were touting it. And from then on, you never heard from ICE about this. Not only did they never apologize, but they never talked about it because they knew they had screwed this one up.
Should the U.S. have such a quota?
Absolutely not. There's no reason to have a quota. That is a made-up number coming from a senior White House staffer who's been hell-bent on ridding America of immigrants. This is a nativist agenda that currently controls our White House at the same time that they want foreign investment. So essentially, they want your money, but they don't want your people. And that's never going to work out.
We heard from the Prime Minister of Korea looking for a resolution. How would a resolution look like? Because until we resolve the issue, he says, the visa issues, then it'll be very difficult for a large number of Koreans to enter or re-enter the U.S.
You know, interestingly enough, the governor of Georgia is in Korea today conducting meetings about this issue. I wonder if he's apologizing. But he had nothing to do with this. This apology needs to come from the Trump administration, and a senior official did quasi-apologize, but never really apologized. The reality, they talk about fixing the visa situation. The president of the United States cannot fix the visa situation. The B-1 is the only visa many of those folks qualify for. Only Congress could come in and create a new visa category for these types of workers from investors to come temporarily to the United States. And our Congress is in no position to do that at this point. They simply don't have the ability to agree to do a limited type of immigration fix when immigration is the major problem in our country right now. And not just because we have undocumented immigrants, but because our system doesn't let in the right kind of people at the right time.
Having said that, then, Charles, I'm just wondering if Korea can indeed press the U.S. for visa system reforms as part of its trade negotiations or any other negotiations it is having with the U.S.
You know, the reality is they can press all they want, but I have heard nothing. And I do a lot of work in Washington, D.C. I've heard nothing in Congress about anybody putting forth a bill to fix this problem. I honestly don't think the Trump administration is serious about fixing this problem because they don't want to allow more workers in. And that's our problem.
It's not just Korea looking at this. Other countries are doing the same. Everybody's looking at the issue with great scrutiny. Can they perhaps force through, insert provisions to safeguard their workers in any way?
I think if enough countries around the world decide, we're not going to invest in the United States until you fix this issue, I think Congress might get the message. I don't think Korea is respected enough in our Congress to demand a change to this. But if a coalition of countries that have invested widely, especially in the southern part of the United States, which was more economically depressed than other parts of the country 20 years ago, but which is now rising because of automotive plants, because of manufacturing plants from other countries, whether it's from Germany or the UK, from Korea, from Japan. Those types of investors need to come forward with Korea, shoulder to shoulder, and say, fix this or we're out. And I think then Congress would get the message.
So strength in numbers. Charles, hang tight. Charles Kuck is still staying with us. Still ahead On Insight, the growing backlash to the Trump administration's $100,000 H-1B visa fee as California reviews its legality and the U.S. Chamber of Commerce asks members if they're ready to go to court. We have details next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. California Attorney General Rob Bonta says he is reviewing the legality of President Trump adding a $100,000 application fee to the H-1B visa program. Bonta says the move creates uncertainty and unpredictability for businesses in his state, and he may launch a legal challenge. The U.S. Chamber of Commerce is also asking members if they would support a lawsuit over the changes to the visa system for skilled foreign workers. Charles Kuck is still with us, founding partner at law firm Cook Baxter. Charles, I mean, some say it's still unclear whether it is legal or not, but it's illegal, isn't it?
It's completely illegal. This isn't an unclear issue. It's 100% clear that President Trump does not have the legal authority to impose a $100,000 tax. It's not a fee. A fee is what you use to pay for something that reflects the actual cost. This is a tax, and the president can't put a tax on anything. But worse than that, the discussion of the H-1B visa as a problem for the United States is just completely 100% not true. The H-1B visa has been instrumental in moving the United States economy forward much more rapidly than we would have done without these workers in the United States. 3 of the CEOs of 3 of the largest companies in America, Alphabet, Microsoft, and Tesla, were on H-1Bs at some point. Most of Silicon Valley is staffed and run by H-1B visa holders. But more importantly, and people don't realize this, 25% of the doctors in America are on H-1Bs. They're foreign doctors. That's the only visa they can be on. So it's not just that this is a tech issue, because you see these numbers here and you see the large numbers of folks on H-1Bs in a tech industry, but they're everywhere. They're teaching school, they're veterinarians, they're accountants, and they're doctors, among others. The visa itself is critical to us, and the Trump administration essentially, with this particular proclamation, is trying to basically end it.
It is illegal currently, but if Trump wants to push it through, he can. He just needs approval from Congress, is whether Congress will approve it or not. Is that right?
Well, he might be able to get this through the Republican-controlled House of Representatives, but there's a 0% chance he gets it through the United States Senate, which would require 60 votes. No way it passes. They're just, frankly, I'm not sure that he can even get it through the House of Representatives. Most of these folks that represent, Republicans that represent areas where there are a lot of H-1B workers, understand this issue. Keep in mind, nobody was told about this. The great surprise about this is that they kept it a secret. That's really the big surprise, that nobody knew this was coming, which is why you haven't seen a piece of litigation filed yet. Before California gets the litigation, before the Chamber of Commerce gets litigation, there will be litigation coming down the pike. It will be very soon, and it will go directly at the foundation of this policy, which is the president's lack of legal authority to do this.
Lack of legal authority, and also the sum is arbitrary, right? We're talking about $100,000 that he's trying to impose when previously it cost companies only some $2,000 to $5,000 for each worker.
Right. The thing with the fee is that our Congress has not just set one fee and forgotten about it. Our Congress has consistently updated the fee, consistently updated the program. When the Congress is so deeply involved in a system like that, the president can't come in under our legal system and simply change it and impose an arbitrary fee. Interestingly, one of the president's advisors, Mr. Lutnick, when commenting at the time on the proclamation, said they initially thought a fee of $500,000 would be great, but settle on $100,000 because some companies agree to that. Now, I don't know what companies idiotically agreed to that particular number, but they must have more money than they know what to do with. This will put many businesses out of business when they need workers and can't get them.
So lawsuits are coming, right? I mean, no two ways about it. You imagine lawsuits are coming, and you do represent some of the companies on that H-1B visa issue. Where do they stand What do they want to do? What are they asking you to do?
What we've told our employers at this point is to hold tight, because there's going to be litigation, and I suspect that we will get an injunction in place probably within the next 2 to 3 weeks, and that nobody should pay this fee. Now, interestingly enough, it appears the president didn't even consult with his agencies in charge of the H-1B visa, because neither the Immigration Service or the Department of State or the Customs and Border folks had any policy in place to do this. So even though people had mailed, for example, mailed in an H-1B filing, which arrived after Trump's deadline, the Immigration Service took it. They accepted the money that wasn't $100,000 because they don't even have a system to pay $100,000. And I would add this. 2 weeks ago, the Immigration Service announced they would no longer take checks. So now you have to pay by a credit card. Who has a $100,000 limit on their credit card, that any business even, that they could just pay for this randomly, let alone for hundreds of them? It's an absolutely, frankly, insane.
So, Charles, for companies, what do they do? Are there any strategies out there that they can employ to mitigate the risks?
Well, the first strategy, of course, is be part of a lawsuit. Agree with the chamber to sue. Agree with the state of California to sue, or those other groups that are suing on this. Be part of the solution, because the courts are your only real solution here. Clearly, Congress is not doing their job. They're not overseeing the president. They're not doing anything to fix this issue. So it leaves us with the courts. Now, we don't know what will happen ultimately when it gets to the Supreme Court of the United States. They've been pretty nice to Trump over the last 4 or 5 months. But this particular issue, we think, is very, very clear from a legal point of view. And we think that a court will almost immediately issue an injunction and put a halt to it.
You know, from your conversations with companies, I mean, provide maybe some sense of the extent how Trump's actions so far will impact direct investment into the U.S.
Well, on the H-1B side, my employers, who, and I've done many H-1Bs over the years, thousands and thousands of them, have simply told me we won't do them anymore. We will relocate out of the United States. We will hire these guys in a country somewhere else where we can get visas for them or where they live. So those jobs, that money that's being earned, the taxes being paid, will no longer be in the United States. They've made that clear. There's just no way they're going to pay this amount of money. They'll just move the jobs elsewhere. And that goes to the other issue of, if a company can't bring in people on a B-1 visa, and now they can't bring them in on an H-1B, why bring the investment at all? The United States is not the only investment market in the world. There are other investment markets that are open and available. Why not go there first and simply wait for Trump to be gone? After all, it's only 3.5 more years.
And about 3 or 4 years can be a very long time. We both know that, Charles. Just one final question before we let you go. There seems to be a disconnect, right, between Trump's immigration policy and, you know, his goal of bringing in investment into the U.S. I mean, how might this play out eventually? Something has to go. Something has to give.
What's going to go is, what's not going to happen is investment. If you can't bring the people with the investment, if all you want is the money is not going to come. I think the Prime Minister of South Korea made that clear earlier. You know, we can't send you the money if we can't send our people. And this is part of an education system in the United States as well. The president needs to come online and either understand this, and then once he understands it, explain to the American people, by the way,
right,
when South Korea invests $350 billion, jobs are created for everybody.
We have to leave it there. Charles, been great. Charles Kuck, founding partner at Kuck Baxter. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside, and we have breaking news out of Taiwan. Taiwan suspending its chip export curbs on South Africa after 2 days. If you recall, it imposes restrictions on the export of chips to South Africa over national security concerns, requiring pre-approval for the bulk of chips sold to the African nation. Of course, that also came on the back of South Africa, which began pressurizing Taiwan to relocate its embassy from Pretoria to Johannesburg in 2023, shortly after hosting a BRICS summit attended by Chinese President Xi Jinping. Again, Taiwan suspending its curbs chip exports to South Africa after just 2 days. TSMC currently trading lower by 0.8%. Now, Macquarie Group says a rollback of globalization and rising demand for AI are creating new opportunities in infrastructure investing. CEO Shamira Wickramayanaka spoke on a Bloomberg panel, a global forum about the rapid growth of data centers fueling insatiable demand for power.
There are also themes playing out, and we specialise in certain themes. I think what is happening, I heard David Lammy talk about globalisation. I think what's happening at the moment is a level of deglobalisation is being driven, where lots of other regions are waking up to the fact that they need to be self-reliant, from energy security, defence, a whole bunch of things. Supply chains are moving in terms of trade. That creates real opportunity for infrastructure investors like us. It's challenge, but also opportunity. And I think energy security is definitely one of those areas where there's a lot of opportunity to invest. I think Europe feels very exposed because of the exposure to Russia and sources of fuel from there, so they're looking to build security. The Asian continent is growing a lot in energy demand and needs to have security. So it's one of the many themes in which we're investing, and we focus a lot on deep expertise. Also, new forms of energy are needed because solar and wind, which have grown to scale, are very intermittent, and we need firming baseload solutions. So we've just raised a $3 billion energy transition fund where we're focusing a lot on things like battery storage, but we hire people with deep expertise in each of these multiple subsectors to deliver alpha.
And that was Macquarie Group CEO Shamira Wickramayanaka speaking on a panel at the Bloomberg Philanthropies Global Forum in New York. For now, let's do a quick check on where markets stand. We know that Japan markets are reopening. China onto a lunch break. Alibaba in focus after shares surge to the highest in nearly 4 years on Wednesday. We're talking about Alibaba surging 50% year to date. It is a very hot stock. China's hottest tech stock, rising around 114 year to date due to growing enthusiasm for its AI plan. CSI 300 meantime up 0.9% gains too for HS Tech, higher by almost 2% right now. Let's get market insights from Shafali Sachdev, head of Asia Investment Services at BNP Paribas Wealth Management, who has an overweight call on China equities. Why overweight on China?
Well, you've mentioned it yourself, right? The interest in China, AI in particular, has been on our radar for a while, and it's been an overweight that we called quite a long time ago. As of last year, we were already calling for an overweight into China tech stocks and AI in particular. You've seen the announcements with the fiscal support from the government, and yesterday was another case in point with the very large attempt from the authorities to support AI consumption. So obviously this is very, very supportive for all of these stocks. But more generally, we would say that if you look at the valuations, especially compared to US tech stocks, this is an area that's under-owned and continues to be under-allocated to by investors globally. So we do think that there will be some catch-up on that, and we expect our clients certainly have been benefiting from investing into these stocks.
When you talk about valuations, I think for Alibaba in particular, 20 times forward earnings, I'm just wondering if you say that there's still a lot of upside, every dip is a buying opportunity.
Absolutely. We do think that, as I was mentioning, we do think that the sector is still under-owned. We think that there is space for global investors looking to diversify outside the US tech space, especially for those who feel that valuations there are particularly overstretched. and looking to build more valuations in Asia.
It does seem like investors are placing a lot of importance on the amount of money, the amount of investments that's being pumped into AI at this point in time. Do you see the correlation? I mean, those companies able to spend billions of dollars are more in vogue than the others.
We saw the tie-up news yesterday, and increasingly also the attempt to have fiscal stimulus supporting this. So all of this points in the same direction, that there is a need to build an allocation into this sector, and that's the way that we've been looking at it.
There are a few voices, warning about caution. Sam Altman, he talks about how you can see a parallel between what's happening now in terms of AI spending to the dot-com bubble. Also, in my conversation with the likes of Jack Selby, a veteran tech investor, he noted the same thing. How are you factoring those risks into the investment climate right now?
Those are absolutely risks to consider. We do think that diversifying away. So I'm not saying that there is not more to be made in the tech sector, including the U.S. tech sector, but diversifying risks away into other spaces. And apart from China AI, which we like, we've been calling for diversification into Europe. And into other asset classes as well. Gold has been one of our big calls, and we're very supportive on asset classes like that as well.
So you talked about how gold is one of the big calls. It is at a record high right now. You're targeting 4,000?
We are indeed.
What will drive it higher?
We think there's a bunch of supportive factors. Firstly, the Fed rate cutting cycle tends to always be supportive of precious metals, including gold. Also, the increasing both fiscal and monetary uncertainty and geopolitical uncertainty as well tends to be a beneficial factor for gold. And then we continue to see central banks allocating an increasing part of their reserves to gold. And finally, a weaker dollar. Gold is denominated in dollars. So almost by design, that tends to lead to higher gold. So we're calling for 4,000.
How best to play gold? Would you buy the gold players in China, for instance? After all, China wants to be a huge player in this space.
We do like, so there are a number of ways to play gold. We do like it as a currency or a commodity as XAU. We also like secondary gold miners, etc. So these are all ways that we like. We also, our clients tend to play it as well using ETFs and structured products.
You also talked about how it is a weaker dollar environment. The dollar actually has been strengthening, and some say it may strengthen further into the year end. How do you feel about that?
Our view is that the dollar weakening trend is a cyclical trend. And while you may have short-term up and down moves, we do feel that there's much more to go on the Fed rate cutting cycle. We are forecasting one more rate cut before the end of the year and two more in the first half of next year. All of these we feel will not be dollar supportive, and we are calling for a weaker dollar. We also think that unhedged European and yen investors will be looking to increase hedge ratios, and that should also lead to a weaker dollar. And finally, we are looking at a move that we see globally of investors diversifying away from the dollar. All of this should drive it down.
Shafali, let's take a listen to what Mary Daly had to say when it comes to the Fed and the outlook for Fed cuts.
Now, my own view is that further policy adjustments are likely. Will they come right now, this year, or going forward? It's hard to say. But what's really important is that making those policy adjustments will likely be required to balance both of our goals, keep pressure on inflation to bring it to price stability, and offer support to the labor market to ensure that it stays near full employment.
Daly talked about adjustments. The question is, what kind of adjustments, right? I mean, initially, the thought of Myron being a Fed governor sent the market thinking that we're going to see huge cuts going forward. But he's unable to convince the rest of his colleagues at the Fed. Perhaps you are overestimating the kind of depth, the kind of cuts that can be expected for the next 12 months.
Certainly, there's a very there's a great deal of data dependency, and the Fed needs to balance between employment as well as inflation. And on the inflation side, while on employment we saw numbers being revised down, and certainly this is an area of concern and something that the Fed, I'm sure, will be watching very closely. On the inflation side, it's not very clear yet whether the tariff pass-through has come in. And it's an area for close watching. And it does indeed make the Fed's job a lot harder, doesn't it?
So the market's more sensitive to the labor market than to inflation.
It certainly does appear to be that way. I think there's also a part of the market which is viewing the tariff impact as being a one-off. And certainly, if we were to find that this is not the case, then that would draw concerns around the whole trajectory of Fed rate cuts. And it would be something that we would watch. We would consider it a big risk for the market.
We talk about risks. We talk about uncertainties, yet when you take a look at the market, there's so much complacency across asset classes. In fact, a colleague of mine pointed out that the price of hedging has been tumbling pretty much across everything. Is that worrying? Or is that telling us something?
In general, we find that, okay, so firstly, I have to say that usually in a rate-cutting environment is not when you see bubbles bursting. It's usually either rate hiking or recessionary kind of environments when you see bubbles bursting. So our base case would not be that, there's something like this on the environment. But certainly we do advocate diversifying. And I mentioned gold as a good place to be as well as an allocation in the portfolio.
How are you looking at opportunities in Asia?
We like Asia, China, AI we spoke about, and we also look at Japan. These are areas that we see many of our investors moving away, who are looking to balance out their U.S. allocations, moving more to these areas as well as to Europe.
And the dollar rebound for the moment is not changing any perspective, not shaping, investment decisions?
Certainly it's a short-term opportunity, but we view the longer-term cycle as not being changed, and so we would view these as opportunities to look to hedge.
What's the one trade you would advocate for?
Apart from gold, the other area that we really like is private assets. And private assets we find are of big appeal, are very appealing to our investors these days, partly because they are protected a bit from market volatility. They are also protected a bit from overstretched valuations. And of course, the possibility of potential outsized returns is always helpful.
Shafali, thank you so much for your thoughts today. Shafali Sachdev, BNP Paribas Wealth Management. We're counting down to the open in India. 3 minutes to go. Here's a look at how it's shaping up. The Nifty and the Sensex down in the last 4 days, marking the longest stretch of decline since mid-July. The rout in software exporters weighing down indices. Trump's higher visa fees have raised concerns about increased operating costs for Indian IT firms. The Sensex currently pointing to a lower open, down 0.2%. Now, a popular strategy tracking high-performing stocks is turning into a losing bet for investors in India. This comes as the market's 6-year rally faces risks. Let's go to Mumbai and bring in Chiranjeevi Chakravorty, who leads our Asia equities coverage. CJ, what's the latest here?
Well, at this point of time, the situation is that momentum, which was always been a trading strategy that worked out in India. If you look at the past 6 years, average returns, they were around 16%. But this year, somehow, that narrative has flipped. The trading strategy is losing about 8.5%. If you look at the strategy for the top 500 stocks, traded in India, and this is in a backdrop where earnings are slowing. A lot of very ambitious estimates for companies, individual companies' earnings are not following through because overall India is going through a slowdown on the economic front. And that has meant that momentum, which is a strategy to, follow prices, especially those stocks which have been doing well in the past, that is sort of faltering at this point of time.
So the underperformance of these stocks is set to persist from here. Is that right?
Yes. At this point of time, it does seem so, because some of the undercurrents, that drive a lot of these stocks on the momentum front are still not as good as, traders or strategists would like to see, especially when it comes to earnings momentum. While it has been improving of late, thanks to, tax cuts as well as other incentives that have been offered by the government to sort of offset the impact of US President Donald Trump's tariffs. At this point of time, there is still not enough confidence that Indian corporate earnings will see upgrades going forward, and I think that is what is stalling or holding back, this strategy from having a turnaround moment. And when we talk to analysts, when we talk to traders who have in the past leaned on this strategy, their sort of confidence at this point of time is quite low.
CJ, can you name some of these companies, the companies which are mostly impacted?
Yeah, I think one of the probably the biggest beneficiary of this trend in the previous years was a fashion retailer called Trent, a high-flying stock which has given triple-digit returns in the past, and it was always driven by expectations that earnings will just keep on growing at a very, very strong pace. At one point of time, it was growing earnings at more than 40-50% on an annualized basis, but that momentum has stalled. The company is now currently facing stiffer competition from rivals, and that has meant that backing this company has sort of been a losing bet in this year in particular. Another example is from the consumer electronics space, like a company like Amber, which is also was driven up because of expectations that earnings will follow through thanks to government's Make in India programs, but that has also not materialized as much as people or traders were hoping for, and therefore you see this trend repeating across sectors. It's not dedicated to just one sector. Across sectors, markets' expectations are not being met when it comes to earnings, and we are seeing the price momentum therefore fall through.
So investors looking for stability, looking for safety, where are they searching? Where are they landing on that?
At this point of time, consumer, seems to be, the big theme in the market, especially if you look at automobile stocks. They have been doing quite well, and that is thanks to the recent revamp in the goods and services tax that was announced by the Prime Minister Narendra Modi on August 15, that is India's Independence Day. That new regime, which lowers the tax burden for everyday consumption items, came into effect earlier this week. And there is hope that with the festive season now, ongoing in India, there are a lot of these consumer discretionary and consumer-related companies could see a tailwind when it comes to volumes and top-line growth, something that has eluded them over the past couple of years. So I think that is one sector that people are really quite bullish about at this point of time, especially given that they don't have any impact from any tariff-related or other geopolitical headlines coming out of the US.
CJ, great perspective. Chiranjeevi Chakraborty, who leads our Asia equities coverage. Still to come on the show, Hong Kong counts the cost of Super Typhoon Ragasa, the strongest storm recorded anywhere on Earth this year. Details are coming up. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Here are some other stories we're following. Shares of Taiwan's giant manufacturing fell after the U.S. blocked the company's retail sales of bicycles over forced labor concerns. Customs and Border Protection says an investigation found evidence of abusive working and living conditions, debt bondage, and withholding of wages. An industry publication in the U.S. quotes a giant statement saying the company remains dedicated to protecting labor rights. China has pledged to cut greenhouse gas emissions up to 10% by 2035. President Xi Jinping told the UN Climate Summit his country will also increase renewables to more than 30% of its energy use. Environmentalists call the targets cautious, but Greenpeace and other analysts say China's rapid build-out of wind and solar could lead to deeper cuts than promised. The latest now on Tropical Storm Ragasa, which has weakened from super typhoon level as it moves toward northern Vietnam, threatening to drench the capital Hanoi with heavy rain. At its peak, Ragasa was the most powerful storm recorded anywhere in the world this year. It killed at least 17 people in Taiwan when heavy rain caused a natural dam to overflow. Hong Kong Airport says it expects to handle more than 1,000 flights on Thursday. Flights in and out of the city were halted for 36 hours as the typhoon lashed the financial hub. Let's get to our Chief North Asia correspondent, Stephen Angle. He joins us live from the Hong Kong district of Seung Kwan O, where huge waves caused significant damage. Steve, what are you seeing there? And, of course, it's time to tally up the damage.
Yeah, let's put it into perspective, because this was, as you rightfully said, the biggest storm on record for this year worldwide. And Hong Kong really did hunker down, because we have memories of 7 years ago with Super Typhoon Mangkhut, similar size and also similar pathway, about 100 kilometers off the southern coast of Hong Kong. This is Junk Bay here, which took the storm, full frontal and took the brunt of it, really. But again, Hong Kong didn't have the damage, and it didn't have deaths yet, I say very cautiously, because, again, the storm was probably weaker at the outer eye instead of the inner circular eye. This is an interesting place because this is southern facing, so it does take the brunt of the storm. And just within the last hour, the local politician, the local district councillor was here, and I talked to her briefly. She said she's going to use this example of this breakwater needs to be bigger. This is a fairly, for Hong Kong situation, it's a fairly new city. So this is a fairly new breakwater, but she says this is not big enough because the storm surge from a super typhoon, the biggest on for anywhere in the world this year, came up and over the breakwater, the existing breakwater, and slammed into this row of restaurants here. And you can kind of see, if anything wasn't properly glued, bolted down, it got thrown into those restaurants. Like this, what looks like pretty shoddy concrete. You have a tree. You can't blame the tree because it's a fairly young tree, planted recently, so it's gone. And also, the floodwater is still in the place where normally on a day like this, bicyclists will be walking through. But it's all the junk here that has been compiled at the entrance to a Belgian restaurant and a French restaurant and an Asian restaurant, where you can really see the storm barriers, 5 foot high, were blown away by the storm surge.
Steve, now it's about the recovery process. What do we know?
Well, we're going to have to tally up that damage that I just illustrated. Again, fairly lucky. Hong Kong's fairly lucky. Mangkhut caused upwards of $500 million in insurance claims and damage. This one, early estimates from Bloomberg Intelligence, maybe 50 to 100 million. So far less damage so far in early light this morning. But again, it was the second T10. T10 is the classification of typhoons. That's the highest, T10. We've had 2 this year. Keep in mind, there have only been 19 T10s since 1946. This year, Hong Kong's had 2. In fact, we've had 11 storms that have been hoisted with typhoon ratings. Typhoon 1, Typhoon 3, Typhoon 8, Typhoon 9, or Typhoon 10. That's a record.
Stephen Angle, well, thank you so much for that. Now, before we go, just a quick look at tomorrow's show. We'll get fresh market analysis from Gamma Asset Management's Rajiv DeMello. Hear why he sees a complex set of cross currents weighing on emerging markets. That is it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.